America is home to 33 million small businesses, the beating heart of communities across the country.
And proof that the American dream is still alive.
This is a show about those dreamers and doers and the communities they serve.
Their real life stories.
Their struggles and successes.
Their grit, determination, and passion.
And the people who fight
to keep their American dream alive.
I'm Alfredo Ortiz.
I'm Elaine Parker.
And it's time for another episode of Main Street Matters,
America's small business megaphone. Welcome to another episode of Main Street Matters, America's small business megaphone. I'm Elaine Parker, the president of the Job Creators Network Foundation.
And I'm Jordan Bruno, vice president of Job Creators Network.
You can subscribe to the show at salempodcastnetwork.com or wherever you get your podcast from. Today, we're joined by David Tawil. David is a co-founder of ProChain Capital and serves as its president. David, welcome to Main Street Matters, America's small business megaphone.
Thank you, Elaine.
Well, I was looking forward to talking to you today with all of the new economic data that came in and find out a little bit about overarching economic news as well as how it impacts small businesses. I mean, we hit 20% inflation under the Biden administration. GDP was pretty disappointing, 1.6%. What's your take overall on the economy?
So the Federal Reserve really seems to be the only adult in the room, the only actor in the room, frankly. I think the Congress is really at gridlock. We don't get a lot of laws out of them, certainly not ones that go ahead and impact the economy very frequently. And the president really only gears up at election time to go ahead and push through economic policies that I think will go ahead and garner him additional voters. So with that said, the Fed, in the face of the 20% inflation, raised interest rates really quickly, a lot, and that had a huge dampening effect on inflation. So inflation has come down a lot, but we're certainly not yet at the levels that the Fed wants to see, and neither are we at a level, frankly, that is good for the U.S. economy and sustainable over the long term to go ahead and encourage economic growth.
And just to follow up a little bit and expand on that, how do you see the labor market and the impact there?
So the labor market really has been a thorn in the side of the Federal Reserve. The labor market is really tight. There are lots of jobs out there. The unemployment rate is really low. This is just based on numbers, not based on what people feel and not based on how many jobs people may be working or the quality of those jobs that they have. But nevertheless, we have really a very high level of employment. And that usually sounds like a great thing. But unfortunately, if we have a really high level of employment, that means that there's a lot of spending going on. All of these employees get paid paychecks, and they go ahead and drive up the prices of goods and services. And so that therefore keeps inflation high. And if inflation continues to be high, that means that the Federal Reserve needs to keep interest rates high in order to try to go ahead and drive down the inflation rate and potentially, I know people don't like to hear this, but drive up the unemployment rate.
When you talk about the spending, it means that there's a lot of spending on jobs. A lot of those jobs are coming in the form of government and quasi-government jobs. So it's not really coming from innovation and invention and even small businesses, which is where we see most of the jobs normally. I mean, how is that going to impact the labor market going forward when we're just basically creating taxpayer-funded jobs?
It's bad. I mean, listen, if you're the person who needs to get reelected as president and you want as many people to come out to the polls as you can, and it's really hard to go ahead and stimulate small businesses so that they will hire people, you're going to use your thumb to go ahead and make sure that the government hires people. Because if those people have jobs, regardless of where it comes from, whether it be the government or from small business, if they can go ahead and ascribe that employment opportunity to the current administration, they're going to go ahead and reelect that administration. And so therefore, The short answer is it's not easy to stimulate the economy indirectly, which is the healthy way, through small businesses. It takes years. But if you want some immediate impact, then the way to do that is to have direct government intervention.
David, a lot of our small businesses really depend on the consumer, like the whole economy. We depend on discretionary spending. A lot of reports out that consumers struggling. McDonald's, Starbucks, I've read that they are seeing the consumers just at a breaking point. How do you see, based on your expertise, the American consumer doing right now?
So the lowest level economically of the consumer is very strained. We're seeing, go to the lowest level of kind of retail spending, which is consumption that on staples, not discretionary, at the lowest price point, that being dollar stores and Five Below, let's say, they're struggling. They've had very bad earnings recently. We've had the liquidation of 99 cents only stores, which is a West Coast based chain that has gone bankrupt and liquidated. There's definite, and the outlooks from these companies have not been positive. So clearly that part of the economic strata is struggling. Walmart, as an example, reported their earnings today, in fact, and they were quite good. Now, the question is, are they quite good because their bread and butter customer is still doing well, or because the higher end customer is trading down? And I believe it's at least in part related to that latter reason, that the higher end customer is trading down. With all, candidness, I think there's very few people in the United States, frankly, of all economic stratas that don't shop at Walmart, right? I think everybody goes there for something. Some people may go there for most things, but almost everybody goes there for something. And so therefore, the fact that Walmart is doing well is not necessarily an indication. And by the way, the luxury consumer is also not doing particularly well. We've had earnings out of Gucci, out of Burberry that have been atrocious, especially in terms of their outlook going forward. We had a report out yesterday or last night out of Canada Goose, which did well. But for the most part, luxury has also been struggling, and we're seeing consolidation in terms of department stores. There's a rumored tie-up between Nordstrom and Saks Fifth Avenue going on. And so I really don't think that the consumer is feeling particularly great because inflation seems to be hanging around. Wages are not going up as quickly as inflation is. And we're not necessarily in an environment where it is easy to go ahead and access capital. When I say that, I mean it's not easy to borrow money if you want to. The default rates on credit cards are spiking, very, very. We're now at 9%. The all-time high is 14+%. But we're really much, much higher than we were about a year and a half ago. And so therefore, credit is starting to tighten, and that is not a good thing for purposes of spending.
Yeah, that tracks with what we're hearing. A lot of small businesses we're talking to is kind of like the customer that would come in once a week is now coming in every second week or every third week. So very similar to what we're hearing. You kind of touched on in your answer there about what I wanted to ask about next, and that is the credit. To what extent is the consumer economy and the small business Main Street economy being propped up by consumers just putting stuff on their credit card?
Huge. So we're at all-time highs on credit card debt. That being said, it's not on an inflation-adjusted basis. So maybe we're at not record highs. But the other thing to keep in mind, this is really important, especially for your audience. The buy now, pay later market is enormous. And there's no statistics necessarily given, official statistics on that market. That's a credit market, right? That's an alternative form of credit that people are now accessing. The government has no visibility into that market. They, A, don't know how big it is, and B, they don't know what the delinquency or default rate is there. So that's a shadow market that's going on that people need to be aware of, because when things start to go poorly, that is going to go ahead and very quickly come out of the shadows.
Sounds like a ticking time bomb.
I believe so. My firm belief is, because of the election season, we are going to, we being the market, right? And it's very important. I understand that your audience is not necessarily concerned about the stock market. They care about Main Street. They care about their stores, sales, profitability, so on and so forth. But it's always important also to look to the public markets, because that's where we got a lot of our information from, in terms of comparable companies, how their performance is going, what their challenges are. So with respect to the stock market, and even with respect to Main Street, I believe that until the end of the year, things are going to be good. And the reason they're going to be good is because our president wants to get reelected. We're in election season, and everybody's going to want to go ahead and put their best foot forward. However, like we discussed, the challenges fundamentally are there. And I think after the election is over, regardless of which candidate wins, the honeymoon and the halo are going to be over. And somebody, inclusive of the American public, is going to have to reckon with a lot of these issues that are not easily solved. And there's going to be some tough news and tough times beginning in 2025, for sure.
We do some national polling of small business owners, and we've actually polled on things like crime, how they feel about the Tax Cuts and Jobs Act expiring. And a third of the respondents say that crime is actually starting to impact their revenues and their earnings. We hear press releases from big businesses that are impacted. I know last year, I think it was in the fall, Target said they were going to close about 9 stores in 4 states. We don't have press releases for small businesses that are closing up as a result of crime. I mean, what are you hearing about the crime, the neighborhood crime, even some of the migrant crime that's spilling across the border is impacting our communities? What is your take on that?
So I used to live and work in Manhattan, in New York City. And so I've seen that city in its best of days. I'm old enough to remember its worst of days. And we're now in pretty bad days. It really relates to, I don't necessarily mean to get into policy issues for purposes of policy, only for purposes of economics. In terms of policy, we have a criminal justice system that is, for many reasons, quite lax when it comes to prosecuting misdemeanors and theft. And because of that, you have repeat offenders, and then you have a signal sent to anyone that's interested or is thinking about, breaking the law, that really the repercussions are not that bad. And so it's incentivizing that type of behavior. And New York City, has been one of the worst of places. One of the places that Target shut down a store. But it's difficult to even be involved in general public places. The subway system is unfortunately a dangerous place at times, and even the city streets are dangerous places at times. And if the leadership, this comes down to really the local level, right, frankly, in terms of cities and municipalities, and even sometimes governors of states. If you're not going to be tough on crime, then you're just going to have crime. And it's funny. I will go ahead and say it straight out, in terms of people got used to, during COVID, some people got used to simply collecting checks and not doing anything. And it's really hard to break those types of habits. And if those people, instead of now getting checks, they need to go out and get their checks, so to say, and they need to steal, or they need to go ahead and commit a crime, as opposed to, in fact, working very hard, it's a very tempting thing if the downside risk is really not there. And so, unfortunately, you have this. And by the way, it's clear that the big cities are the worst places for this, right? I mean, we didn't mention San Francisco, which has literally gotten to a place where I don't know if it's recoverable at this point in terms of divestiture of properties. I mean, investors have left, stores have closed down. People have written down their investments there in terms of real estate to zero. You've got San Francisco, you've got Chicago as a close second. New York is awful as well. Los Angeles is bad from a commercial real estate perspective. I don't know how bad it is from a crime perspective, but the big cities have really gotten hit hard. And those are very much, sources of power economically and financially, for the overall U.S. economy.
Yeah, I saw Steve Buscemi got sucker punched just in the news in Manhattan. It's just wild to hear these stories coming out, and really sad. And who wants to go do retail shopping on Main Street when you're confronted by that overt crime, and then just also the public decay and those the people on the sidewalk and the junkies. It doesn't make for a very pleasurable shopping experience. David, want to get your thoughts on interest rates. A lot of our small business owners are in a credit crunch. They just can't access credit. They need it to expand or even survive. And it's so expensive. Do you think the Fed will cut rates this year? And then my second part of that question is, if you do think so, do you think it'll be more of a political decision and I guess a decision about debt servicing costs to, like, say, help the U.S. Treasury versus a pure rate cut based on the fundamentals interest rates?
Right. So here we have a real issue, which is that the Fed has said very clearly that their target inflation rate is 2%. It's going to be very hard to get there without a serious slowdown in our economy. I mean, we're hanging around. The first, as with anything, the first step of accomplishment, if you got a massive spread, a massive chasm between where you are and where you want to get to, the first big piece is pretty easy to take care of. It's the last piece, that stubborn piece, that's really hard to take care of. And that's where we are with the Fed. So they've said 2%. If they change their target, we're in a different world, right? Maybe they change their target to 2.5% or 3% in terms of the inflation rate. And, they start cutting in advance of that because they shouldn't just wait until we get there. They want to start start going ahead and cutting interest rates before we get to that point. I don't think that this Fed is, simply because of its history and having gotten so much wrong in the past, especially when it comes to inflation and it being transitory and so on and so forth, I don't think this Fed is ever going to go back on a clear word of theirs. So Jay Powell has said 2% is the target. That's the target, folks. I believe it. Therefore, but on the other hand, your point is very important, i.e., there's an election season coming up. Biden's got to look like he's doing great for the economy, and he's got to make people get out to the polls. I believe that we're going to get, and by the way, not to sound conspiracy theorist entirely, you've also, or not conspiracy theorist, but that Biden controls the Fed. I don't believe that Biden controls the Fed, but I do believe they are of the same mindset, Jay Powell and Biden. And therefore, Jay Powell has already said also that there's going to be cuts this year. And I think we get one cut before the end of the year. It's going to be a token rate cut. What the market does off of the back of that, I don't really know. If people get really excited that we're on a trajectory to go down from here, I don't know how the market's going to react. But I do believe it's a token rate cut. And I believe even after that cut, there's a very good chance that that's it. There's no cuts after that until, in fact, this Fed, whether it be the current Fed or a successive Fed chair, needs to go cut rates because the economy is doing poorly, not because they want to go ahead and wave the flag of success on destroying inflation, but because they have to, because the economy needs to be stimulated. So I believe there's a very good chance that we won't get another rate cut after this cut, and there is even a chance that we may get a rate hike after this token rate cut. Not directly after it, because it would sound like, the Fed doesn't know if it's coming or going, but certainly at some point in 2025, there may be a rate hike. So I think that's the answer to your audience. The additional answer to your audience is please, please, please be very thoughtful about the types of credit that you access. Not all credit is the same. And I know when people are desperate for credit, and when I say desperate, not because you're failing, but maybe because you're desperate to grow and
Right.
you really need the capital. Please be thoughtful about things like merchant cash advance type of structures, something that's really onerous in terms of your business, because you do need to be able to contend with the eventual interest rate and the eventual principal payments on those, credit lines. It's not just about accessing the credit, go ahead and manage it properly, please.
David, the Biden administration looked at some of its successes as some of the big bills that they've passed, the American Rescue Plan, the CHIPS bill, the infrastructure bill. I read a report recently, very little of the money has been spent. And in fact, out of the infrastructure bill, I think there's been 8 EV charging stations put up in the entire country. So there's a lot of money sitting there. And part of the campaign strategy on the campaign side for reelection is to get that money out the door this year and to show some actual spending. How do you think that's going to play with the Fed's, we must see a rate cut, because as soon as that money starts going out the door, it's going in the wrong direction for the Fed?
You're absolutely right. But at the same time, we definitely need infrastructure. We had a bridge collapse in Boston, right? And that went ahead and triggered, not because it collapsed, because something ran into it, but, you've had now a review. We get this from time to time about all the eroding infrastructure that we have in this country that needs to be, reinforced. And so therefore that's money that should be spent. It's good. It's putting good money to work in a good manner. And then the other thing is with the CHIPS Act, let's say, I don't know where, regardless of where people fall out vis-a-vis China and our relationship there, you need to admit to the fact that that country is, will use tactics that goes ahead and undermines our domestic businesses from time to time. And so therefore we do need to go ahead for purposes of general security and the general ability to go ahead and, be self-sufficient. We need to go ahead and support our businesses that are competing against, other countries that may go ahead and undercut our prices for purposes of predatory pricing and things like that. So all this money is well spent. It's money that we definitely do need to spend. But to your point, yes, the government's injecting more money into the economy, which is only going to lead to lower unemployment, which is then going to lead to spending, which, raises inflation or makes inflation stick around. So another way to say this in short is President Biden is one of the worst thorns in Jay Powell's side, right? Because he just keeps coming out with policy. If you go ahead and knock out a couple $1 billion of student loans, well, now since those students don't need to pay interest or pay principal on those loans, they're going to go out and spend the money they would have otherwise had to pay on that debt. And so, yes, the student feels great, and therefore they're spending, and therefore they're going to vote for Biden. But for Jay Powell at the Fed, that's the worst news that he could possibly get.
Right. David, last question from me. Most of our small businesses are plowing their earnings back into their business, trying to grow, survive, outcompete their competitors. But a lot of our small businesses are established. They're making a monthly earnings, and they're looking what to do with their money. They're seeing the markets I think it hit an all-time high this week. Do you have any recommendations for these small businesses? Is it a dangerous time right now to be putting your money into the market, or are you looking at alternative stuff? Like I saw on your Twitter, there was a lot on crypto there. Do you have any high level recommendations for them?
Absolutely. So like I said, I think the market stays strong through the election. So therefore, betting on stocks generally, I think, is a good move. Rates are high. Maybe take advantage of some of that. Lock in. Go ahead and buy some bonds that have some good yield to it, because if other people are right, we're going to get multiple rate cuts. That means that your bonds that are priced with a pretty high coupon today will become more valuable over time, if in fact we get those rate cuts. So go ahead and think about fixed income. And like you said, I'm pretty heavily involved in cryptocurrency now for close to 10 years. I believe that cryptocurrency will change the way, or has started already to change the way that assets are recorded. Everything will be represented digitally, whether it be, value in the case of Bitcoin, or stocks, or bonds, or money market funds, or property or insurance policies. All of those things will be represented digitally. I think that's the way we've gone technologically. Everything will be transferred digitally. And so therefore, cryptocurrency enables all of that in a very secure manner. And yeah, it's been a sector that's, seen some incredible gains, a lot of volatility, some criminal activity. But nevertheless, I think, the next 5 to 10 years, certainly there's a blue sky out there for the cryptocurrency sector generally.
Well, David, tell us a little bit where we can go to find out more from ProChain Capital, and where we can maybe follow you on social media.
Oh, sure. So I'm best connected with on LinkedIn. You can find me, David, a middle initial D as in Daniel, Tawil. Feel free to send me an invite. And then to hear I post a lot of thoughts there. And then also on Twitter or X, my handle is David D. Tawil. I'm pretty prolific. And on X, I actually co-host a daily finance show at 8 a.m. Eastern time. You can find us. It's called Finance Daily. I co-host it. We get about, 60,000 listeners on average on any given day, whether that be live or recorded. And you're more than welcome to go ahead and join into the conversation there. We discuss issues that we've discussed just now and more.
Great. Well, thank you so much for joining us on Main Street Matters, America's small business megaphone. And thank you to all of you for taking the time to listen. Main Street Matters is part of the Salem Podcast Network. New episodes debut every Wednesday and Friday. You can subscribe to the show at salempodcastnetwork.com or wherever you get your podcasts from, and we'll be back soon with another episode.